Hello traders, how are you doing? Good morning. Welcome to our webinar WoW Trades. Let's begin. Well, first of all, and for the ones that know the format of this webinar, I'd like to start talking about me a little bit before everything. My name is, again, Alberto Alvarado. I'm a Forex trader since 2005. I trade from Mexico City, and I have more than 10 years of experience trading this world. I started, as I just said, in 2005, and well, I lost my first live account in less than a month. But the experience that I received after that is to realize that the Forex markets were the things that I wanted to develop for the rest of my life. So I decided to take seriously my self-education during 2 years. After that, I started receiving the first results of my efforts. And in 2008, I lost it all again due to the financial crisis that we all know that happened and started in the United States. So at very high personal cost, after that I decided to continue. But what this crisis helped me to know and to realize is that what I thought it was my edge was not complete. So I decided to integrate the emotional, creative, intuitional element to my trading, and it ended working very well for me. Just a heads up about this, this doesn't necessarily mean that this is the way that it will work for you. I'm just sharing what it works for me. But maybe the message with all this is that if you if you have not gotten to the point of getting at least into the break-even area as a trader, maybe just to give it a try, because it can actually work for some of you. Besides that, of course, not only my what I call my edge is not only that. Of course, I use traditional tools in the technical side like MACDs, etc. I keep up with the fundamentals. I don't have any kind of major studies on mathematics or economics or something like that. I just keep up with fundamentals. There's a lot of information in the internet. You look for it. You read some analysis that you like, etc. So you can know where we're standing on the fundamental side. And well, this altogether is the result of what I call my trading edge. So what you're going to see here is a result of all that. For the ones that haven't subscribed to my free YouTube channel, when you receive tomorrow the link of this recorded webinar, you can look it up for subscription. It's for free, of course, in YouTube. In YouTube, you can type IBB Stream Room channel as it is here. You don't need to do it now. You will receive the recording, and after that, this will show up, and you click subscribe. For the ones that manage that like Google Plus account, I have a Google Plus account, and you can look me up as IBB Stream Room. What's going to happen today during this webinar? Well, we're going to talk about the Macron French president election. Of course, this is a major topic, the major news, because this has had the risks of that besides the North Korean conflict that we have had like more weeks. That conflict to be diminishing. Besides that, the French presidential election was a major stuff. We're going to see that in the next minutes. We're going to talk about the next big challenges for the European Union, like the Italy and German elections, and how this will be reflected in, or how I think it's going to be reflected in the price action. We're going to check if we can find something useful in euro, dollar, and dollar yen. Okay. let's just begin. First of all, let me show you. This is what you're seeing here is a euro dollar daily chart. Okay. From March 2016, so we have more than 1 year of data here. This big gap was the first round in the French elections. As you can see, we opened very heavily on March 21st, March 23 to the upside when the markets realized that Le Pen was not leading the election preference. This can show you how real the risks were, because imagine if this gap was to the upside. Because of that, imagine what could have been the gap to the downside if we had in the first round Le Pen leading the voting preference. I was commenting during some other webinar deliveries that I was expecting that if Le Pen won the elections in France, we could have easily went to the parity in euro dollar in a snap. More or less what happened in Brexit, after Brexit, that we had a massive sell-off at the beginning. This was the same thing. So this is the first gap, and then some days ago we had a bullish gap. It is this one, May 7, that is this Monday. We opened just at the psychological level, and after that the market has done this to the downside, like a technical retracements. We all know that if you want to buy something, you don't buy it at the resistances. Overall, when you have psychological resistances, I'm going to put it here. And we have to check the quality of this resistance. I've been commenting to other fellow traders that told me why I didn't long on Monday after the confirmation of Macron being elected in France, and I said that that is, as a good habit, you need to develop the skill of mastering your emotions, and not fall into the crowd behavior. Like a lot of people said, okay, if Macron won, this will shoot up to the sky. Well, not necessarily. This is the daily chart again. We can look at this region, and this is volume. For example, this, you can check how much volume was in here and here. Okay. So in these both places, you see the difference in volume now. So what you can expect is here, more likely because it's psychological resistance, and in this case it was a psychological support, you can expect sellers here. Not necessarily short sellers, but maybe the long, the participants that long taking the huge risks of being in the wrong side of the market. And when they saw their bets, because in this kind of risk, you don't call that kind of thing a trade, it's a bet. They knew and they realized that their bet was right, they cashed out. So I was not expecting at this moment the continuation of the movement. Actually, what I was saying is that in this level, what you can expect is maybe now having the opportunity for the euro dollar to close this gap. We've seen during this, I believe, more than a year and a half, a lot of gaps that haven't been closed, like the one that we're going to check in some minutes, dollar yen. And the markets have shown us that, for example, after Brexit, the weekend after Brexit, we have a gap that hasn't been closed yet. We're going to check that and remember that gap. Usually the markets spook a lot when the gaps were not able to be closed. For example, if you have a bullish movement, a bullish gap, it was considered that it was like a religion to say the gap needs to be closed. Well, not anymore. The markets, for some reason, can have learned how to survive, or how to feel comfortable with a gap that's been not closed. So, but due to the fact that, and this is where the geopolitics mix with the price action, that is why you need to be aware of at least the most important aspects of the worldwide politics. In some forums, you can check that people tend to trust way too much on technicals, and only technicals. They are very interested in developing a holy grail and an automated system, only considering moving average, etc. But that's only a small part of trading. You need to be aware of this. You just cannot trade these kind of things under these kind of situations, just relying on moving average, etc. Because the moving average, the formulas of all the technical indicators don't adapt to this kind of geostrategic things or geopolitical things. So you need to be ahead of that. You need to have an opinion and first shape in your mind what you think is going to happen if, for example, Macron won or Le Pen won, etc. And from that, you find confirmation of your views and your levels that you want to trade with the technicals. The technicals are only that. Technicals are not to be it is the technical analysis not there to make it a religion, to build cathedrals upon technical analysis. This is one of the first mistakes when we are newbies, and I did it when I started trading. I thought that you can simply skip and overlook all these kind of things and just focus on developing your robots or your technical indicators, fitting the curves, fitting the parameters of the indicators. The indicators that I use are just the way the chart package draws it, because my trading edge is not based on parameters of every single technical indicator. So it's an obligation for every trader to have an opinion on what had happened if Le Pen won or if Macron won. What could happen if in Italy or in Germany in the next months, etc., they will face elections, etc., and how that could affect a negative or positive effect on euro-dollar. The truth is that, in my humble opinion, if France had decided Le Pen a chance to rule the country, it would have been basically the end of the EU, at least as we know it. Because what the EU don't need at this point, is losing another member that maybe is, after Germany, the most important, because that would have been too much. The synergic effects of a Brexit plus a Frexit simply would have sent a super strong message to the Euro member community that, okay, if the biggest brothers, if you want to see it that way, economic brothers, they are, I believe that UK, France, Germany are the three bigger brothers, the biggest brothers in the EU. If you see that, maybe that would have convinced a lot of voters in the next elections locally to vote for a nationalist or a radical that was convinced to leave the EU. So this would have propagated and would have triggered the next financial worldwide crisis. I've been saying during some deliveries here that just sit on your hands and wait unless you really know what you're doing. Trading under these circumstances, and I said, when you mix the potential Frexit and the North Korean conflict, is not a good circumstance to trade. I said the latest webinar that if you wanted to trade something before these French elections, before the North Korean conflict being solved or settled or at least calmed down, that just open your time windows of your trades. Oh, and if you were trading binary options through binary.com, to maybe just trade not 1 hour, 2 hours, but maybe even 1 month or 2 month trades, so you can filter all the noise. Now that the noise, I could say that is pretty much over. We still need to see how Donald Trump would react if North Korea actually tests a sixth nuclear weapon in the North Korean peninsula. And since the markets really don't know, because this guy has thought that the unpredictability is an asset to rule the United States, thing that I believe is completely wrong. But this guy believes that is the best for the world and best for the markets and best for the U.S. interest. The thing is that the markets won't know how to react. So now more than ever, even having Macron winning the elections in France, after hitting the 1.1, any negative thing that could happen in North Korea could simply trigger a sell-off here, because it is natural now. You just retested here the 110, overall understanding that who was buying and why it was buying. The ones buying were the ones that were betting with huge risk. So in the same measure, they were going to be interested in just closing the trade in a winning, if they managed to do that. For example, people buying overall here were really taking huge risks, because as you can see, some days after we had the first round of the French elections, and the markets, even when you had polls signaling that Macron was going to lead, we have to remember that the polls on Donald Trump election and the Brexit were wrong. So imagine the risks of buying here. And I mean not the risks of retail traders, because here there were a lot of big guys buying. So imagine now all the risk. Now they of course want to take money out of the table. If you have some kind of test in North Korea, plus the uncertainty of not knowing what the United States would do, this would be reflecting negatively. So yeah, we could have this gap closed at least. This is the most typical thing of buying the rumor. I buy the rumor that the euro will survive, and I sell the fact, and I sell the news when I realize that my prediction was correct. So yes, I could expect this could continue going down. Now the support that we're testing at this moment is this one. As you can see, at this very moment, the price is testing this. Of course, you can see here that we have pretty much undistinguishable volume, so we're going to zoom in a little bit just to check if we can see something interesting. And yes, this could be for the bulls. This could be an entry point. If you decide to be a bull here, the thing is that you need to consider that even you can have the price even closing this gap and still hold the bullishness here. I am not convinced, differently from the dollar-yen trades, that euro-dollar is fundamentally biased to the upside. We have now one less negative aspect to consider before trading euro-dollar, one risk less, but not necessarily the outlook for the EU economy is convincingly higher overall because of the ECB decision, that this bank has been pushed to change the passive mode and super low interest rates and start increasing the rates. But the problem is that not all the bloc in the EU is having good results economically, and the ones having good results At times they are showing very mixed results. So if you start increasing the rates, you could kill the economy in the EU. So it's a very delicate thing. We still have this. I believe that after the French elections, what the ECB will do is the most important thing. Not the German elections. I believe that in the same direction of my line of thinking. If Le Pen had won the French elections, it would have been the end of the EU. And you would have had nationalists Le Pen-like in Germany winning, in Italy winning, etc. But now that France, with a good decent of advantage, gave a Eurocentrist, a Euro enthusiast, the chance to rule France, that will end up convincing the undecided vote anywhere else in Europe. So at least in the political side, I believe the risks are over. But now the EU needs to do something different in the monetary policy side. The thing is when. And this timing thing is one of the toughest things for a trader. Timing is the difference between a winning possibility and a losing certainty. Imagine how an interest rate that would affect the whole EU zone, the importance of timing. The thing is that we have a lot of interest starting pushing the ECB increase the rates, and now the excuses of not doing it are running out. But there's a huge question mark on the real effects, not now, but maybe the first effects are going to be seen in 1 year, 6 months after the first rate hike. But in the meanwhile, we're going to have a time window of 6 months at least, not knowing the exact, if it was going to be a good decision of increasing maybe a quarter of a point. Now imagine, that is just a quarter of a point. But now imagine having 2 rate hikes. If for some reason the decision was wrong, we're just going to see that in 6-7 months at a minimum time window. But if it was a bad decision having one and then you have another the other month and another the other month, it could cause a disaster. So that is why I believe that euro-dollar, this in not fundamental, but yes, the monetary policy is part of the fundamental trading. This was a rally to continue selling it. Maybe not, of course, with panic or something. Maybe in this year, I would expect maybe the market to be moving between the 110 and the 105. So when I say that potentially this has reasons for falling, I'm not saying that this will fall forever. No, I mean that maybe it will just first try to close the gap and then move up and then move down again. So you will have chances both sides, up or down. But yeah, buying here, I mean, you can just look at it. We just hit this massive resistance, and now we're just wanting to buy here. But just now we have a cliff. So yeah, in any case that you want to long this, and we're going to move to the 4-hour chart just to see. We have a, wait a second. Well, we cannot see. This is the support now, but we can barely see the volume. But as you can see here, this support has the highest volume alike with this zone. So yeah, we could have a buying interest now. That could be reflected in what way? Well, maybe before continuing closing the gap, we could have a retest of the 110. But the things that we don't forget how important the 110 resistance is not a child's game to break that point. This is the important thing. It's not a child's game to break the 1.10 because of the volume, because of the importance psychologically, because that, yeah, we still are in an experimental stage of the ECV, of what's going to do, how, when, and the real effects. It is way much more predictable to know what could happen if you miscalculate the timing of an interest rate hike or cut in a traditional economy than in an integrated bloc like the EU. It's still a very mystery to know what will happen. So it's not going to be easy. Now, well, maybe we could start moving in this range. But at the moment, if this fails, and the only reason to maybe anticipate that this could be failing, this support, is watching the very small time frames like the 5 minutes, could give you an idea if this could continue falling. And if this continue falling, this will close here. At least we'll try to close this gap at 107.25. So let's put it this way. For the ones that decide to go long here, it depends on your analysis. You need to realize that your stop loss needs to be, if you really want to believe that this is going long, that is a longing opportunity, the stop loss needs to be well below the 107.25. Why? Because the market could easily go down, close this, and jump up again. You could have at least, like, let's say a 1-to-1 risk reward, but it's not actually 1-to-1. It's even lower. Maybe I could say, and taking this ascending triangle as a reference, that, by the way, you have realized is already over, so this triangle is not that valid anymore. But taking this gap, that, look how the precision is. The gap here, this trend line, was drawn using the highest of the candle before the gap. So here, we could have easily the price going back here and trying to retest here. But the real stop loss should be like more or less here. But of course, since this is a very important support, we could have the price after that maybe doing something like this. But the probability that the price gets to the 105.70, the probabilities immediately change to the downside. I mean, the probabilities after some elements align again. We need to realize that that you buy at bottoms, when you have a movement to the downside, and this is very important, put a lot of attention here. When you have a movement, let's say, to the downside, people tend to believe that this is a selling opportunity. Contextually and in the trading language, when you have the market going down, it's because you have an exhausted buying opportunity. But that in the same side means buying opportunity. To whom? To the ones that accumulate. So every time that you have, let's say, the market getting up to here, let's say it gets here, you could say, oh, the probabilities increase to the downside. Yes, but first, it should go up. And here is where the ones that accumulate, that are the big guys, that are not interested in closing a trade in the next hours, but they are visualizing positions in their portfolios to hold them maybe for weeks, for months, for years. They start buying here. So just at this moment is when you have a selling signal, and this is why the major trading signals fail. When you have a selling signal, it's because you have an exhausted signal. So before selling, you need to wait for the retracement, and this is very tough Usually we tend to say, okay, this will continue falling just to see the market reverting. Well, this is the way it works. It's not that easy that if you see something going down, you just buy and you just. The question in trading is for how much and the timing. Because if it goes down very quickly, well, maybe there won't be any opportunities for the bulls to really restructurize demand here, and they just rebound a little bit and then continue falling. So it is not only a matter of technical analysis. You need to do your own, in my opinion, intuitional analysis to include it, to really feel what is behind a selling, a sell-off, for example, if it was too quick, how the volume was, if in the lower time frames you see something interesting in the candlestick, for example, charts, if you see an interesting candlestick that could indicate you that bulls are still there or not. And when you sum up all that, you can figure out a strategy. And a strategy is formed of different tactics, where if you buy, you need to understand that the market could be preparing in your buying leg to sell again, and the same works for the opposite. When you have like what happened here, what you had the price moving up, if the bulls were right here, but maybe this could mean only the best place to start. While this price moved up, if there are some bears outside, they could have been selling here, here, accumulating here, and then boom, moving back. So we need to see that the bulls and bears they need each other. If I have a buying interest, I need first somebody interested in selling me. And the most likely place that somebody will be willing to sell me something is at a high valuation. So you need to have this in mind. Technical analysis usually fails because of that, because you need to put these things in a context, in a language. When you have a selling signal in most systems, it's because the bulls read that as I always oversold, so I should start looking for buying opportunities. But it depends on when you get to a point. For example, now we are in a very important price. Just after Macron, this is the first important support. So what happens here will define if actually this is part of a I am buying here, buying here, buying here, buying here too. When it goes up, I will start selling, selling, selling. Or if at some moment, this could mean a pure shorting opportunity that started here. So it is not easy. Trading is not easy. Trading is not made to make you rich quick. Actually, it's done the other way. So you need to be ultra careful, not just to go, and I insisted this in other webinar deliveries. Just please don't go with the hype that after the French elections, you will start seeing in the media, oh, okay, all the risks are over, so euro could continue going up, etc. Because look what just happened. The mass media, the responsibility of the mass media is not to tell you what is going to happen, but is going to tell you after the fact what is supposed to happen. But the markets, the job of the markets is to anticipate the news, is not to react. The markets are proactive, not reactive. Reactive is after having a bad news, good news. But the markets, since they need to accumulate huge positions, for example, if you want to really accumulate, if you're a hedge fund, and you need to accumulate and you believe that euro will go up, when you buy, when this is going down, you're buying here, you're buying here, you're buying here, you're buying here, anticipating maybe a good news like Macron winning. So while others are selling, maybe retail traders like us, they are buying. So you need to understand the structure of the market. Who is buying when and at what levels? I honestly believe that there were some very big banks betting for this quick trading opportunity. Maybe they updated their ways to measure the voting preference, and they said, you know what, we're having this right now. But in the overall context, maybe this is a shorting opportunity because let's face it, we have a major risk in the political side being okay, ruled out. But then we have another as important problem, the monetary policy. That there are economies that are not reflecting the same German results. So at the end, you cannot continue having a European Union depending on having Germany bailing out a lot of countries because that is not a community. The same word it explains it. Community, things in common. And one of the things they need to have in common is not only a currency, but how their economies behave. But for some reason, you see the German economies and other economies, and they don't necessarily look like if they are in tandem or in agreement. So this is why, again, in the daily chart, and if you zoom out, you see this. I mean, we're talking about the 2014 sell-off, and then a consolidation zone. If you see this, it becomes clearer why I'm not bullish. I could be wrong, yes. But when you see the real context, when you see this kind of news happening and confirming that the 110 is a supermassive resistance, that looks like suspicious, right? So it would make the complete sense that in the longer term, we just come from these prices, from 105. You see? So, yeah, the market made a lower low, has been good at sustaining since it hit the 104, trying to not to continue doing lower lows. We're having higher highs here. But yeah, maybe because of the quality of the resistance, and I see it very difficult that when you see this context, that maybe now, if you're going to have the gap in euro dollar after the first round of French elections opened an opportunity. What opportunity? The gap closing opportunity. Who are going to capitalize on that if possible are going to be the big guys. So yeah, this could open an opportunity to go here. If you see here, if the market gets the 105.20, it would be hitting this and this, and still doing a higher low. So this is what I believe, because now I could tell you that not even in Italy, a nationalist winning really would have a big effect in the EU. This is for sure. Another thing is in Germany, but in Germany the things are way more predictable, and apparently, yeah, things are going to continue the same way they are now. So yeah, this is why you see how when you put this in context, how difficult it looks that using only this very thin trading range, this could continue going up after having these massive volumes at this resistance. It is okay. Maybe this will continue going up, but come on, at least you need to gain momentum to the downside. Why? Because the structure is this. If there are going to be big bulls here, big ones entering big volumes, they need to find somebody to sell them something they want to buy in huge quantities. They don't buy. They expect somebody to sell them things. Whom? The short sellers. You're shorting, they are buying. You're shorting, they're buying. You're shorting, they're buying. And when you get here, they have all that things accumulated here, and then the market, if they start moving up, at these stages, they will start selling, selling, selling. up to maybe here. Okay, so have this in mind every time that you trade. If you're a super short-term trader, well, uh, this makes no sense. The objective of this webinar is try to give you a context, joining the fundamentals, and you cannot trade fundamentals only with a 5 minutes view unless you are really either good or kind of gambler. But besides that, trading the fundamentals needs time. So while this is the the euro dollar thing, I spent like 42 minutes talking about this because of course it's the most important thing and it gives you clarity. I insist on this. Beware of the mass media. And I said this in the last webinar. Distrust the mass media because if we have Macron winning, they will try to sell you the idea to buy, when it's actually the opposite what you can expect. At times the mass media gets it right, but it's not, you know, in trading it's not if you buy or sell, but to do it for the right reasons. Yeah, the mass media could be right that this will start building, being part of the building blocks of a bullish movement that will happen in the next year. Yeah, this could mean that, but before we can have this retracement and then having the euro going up. So the mass media, their work is not to help you with your trading. You need to put that context, to read the context. And one of the things that I share here is this volume stuff. And this resistance that is besides psychological, a super high volume resistance. If you really want to build a bullish movement that you can trust, that can send a signal to the world that we are strong and euro is stronger, you need to find, you need to have accumulating momentum. We have had accumulating momentum during all this stage, yes. But again, we're hitting this super massive resistance. The people buying here were eyeing this price, not other price. So now that we get here, what you can see, and even could look beautiful, because yeah, at times I believe that traders, we are a kind of a more or less artist. We have to develop a good taste, and at times aesthetics, in my opinion, has a role, has a place in a trader's success. It could even look beautiful to have a movement to the downside. That doesn't mean that this will do it. The market is done tick by tick. But let's face it, when you put this and you expect that this, after massive resistance that hasn't been touched before, this is the objective all these guys buying here were looking for. So yeah, maybe the most likely thing is at least you have a super typical traditional objective that is closing this gap. So yeah, maybe the opportunity is now. Okay. Quickly before we close the webinar in 15 minutes, I've been talking about dollar yen more often during the webinars. Just let me show you the continuation. We have here at the 112, I've been talking about that. These were the first signals the market started feeling comfortable with Donald Trump. And according to a lot of things, fundamentally, this trade is based to the upside. First, because inflation in Japan is simply not working the way it should, so you can expect at least a decade more of almost zero interest policy. In the other hand, you have good results in the U.S. There was a lot of expectations here. First, the tax reform by Donald Trump. they started believing that they started seeing the first signals that this guy could be decaffeinated and not as radical as some voters wanted to believe. So here we had the first buying interest. We've been developing that idea here during the webinars, eyeing this precisely resistance. Then we had some dovish comments by the FOMC. This is daily chart, by the way, dollar yen. And we had this first sell-off, thing that it was like a natural thing. But then we had the North Korean conflict starting and gaining momentum. So the markets reflected this selling this. Because we were even talking about a potential nuclear war. So these are not precisely small words. So, okay, the market just sold off. The strategic events like these ones are the ones that the markets cannot anticipate correctly. That is why maybe are the only, or when you have a super deviated number in the fundamental side, you will see the market reacting in the direction of the news for hours or even days in the direction of the news, but usually it's the opposite. Because they structurize the market structure, and always before entering a trade, this will shape and change completely the way you see the markets. When you put in front of your trading your chart package, and you put in your mind the idea that the job of the markets is to anticipate things and news, everything changes. Because you will start seeing that when you have a good news, it's precisely, okay, how well the market anticipated this, or how bad. And that is what will end up moving the markets. And not the way that we usually start trading the markets, that we believe that people with a lot of money react. At the bottom line is this: rich people react and uses money in a very different way than retail traders or people that don't have such amounts of money. They accumulate, and they need to create at whatever the price opportunities to accumulate. That is why watch out the mass media. The mass media is one of the first instruments to create the opportunity for others to accumulate, because they belong to that side of the market. The mass media is not to help the small ones. So when you start accepting this fact that rich people actually rich people tend to risk, because they know that the risk and in the opportunity of accumulating that taking risks allow is the only way they can accumulate. And if price moves in your favor, you can actually start winning and start selling gradually. This is the way it works. So distrust mass media and try to if you haven't realized this fact, start putting it gradually in your trading edge. That the markets are like a voting machine. They try to anticipate things, and when things happen, they just evaluate, okay, we did it right, we did it wrong, we were underestimating or overestimating. And when you put this, the fundamental reaction after news releases, you will start understanding them in a different way. If you start putting in your mind, okay, who is buying it? Try to figure it out. With time, you will start developing the feeling. Okay, who might be buying now? The last time I checked, I believe that let's say a quick. Last time I checked, at this moment, I thought that the big guys were buying, but It was not in my interest as a retail trader to buy. But in the same, we're receiving maybe the same price patterns here. So with your experience, you will say, you know what, I am seeing a lot of things that look very, very likely here than happen here. And I thought the bulls bought here, and actually I was right because the market moved up. So maybe we are here facing a buying opportunity of these guys. Or maybe this is not a buying opportunity of these guys. Maybe this movement could be the take profit opportunity of the big guys that started shorting here. So it makes the difference whom you are buying to or whom you are selling to. If you're selling to somebody that has shown that anticipated this kind of movements, if you're taking the opposite side, beware. But this is very tricky. Since we really don't have that information, it's very tricky. But as an exercise, you start doing it because this will give context. At times when we start trading, we really have no idea what is happening. And the most, if I can be very straightforward, it is not until you get to the break-even area consistently that you can consider that if you have had success in some trades, maybe it was just a matter of luck. Why? Because when you start understanding that this is a language of a way of thinking, of a mental structure, of the guys that need to accumulate and accumulate opportunities, everything changes. And then you realize that you are an endangered species because what you are trying to do is to find a way to trade, to make a living in an activity where you are so small and these are super big. So you need to be careful. Trading is not precisely something that, I mean, you can do it. If you have this profile of being super risky or pro gambling, etc., of course you can trade that way the markets, but you will receive that kind of results. In a casino, when you go 99% of the times you lose money. Well, don't expect a different result when you approach to the markets with the same logic. That, yeah, at times, the most part of the times, people, when they approach to the markets, they approach to the markets in a complete ignorance. The same ignorance when you go to a casino and you ignore the probabilities, you ignore how the things are happening there. You just go there to have fun. You need to develop all this to start thinking on what other one is thinking of what others are thinking and what they think that I am thinking. So this is a mental game. This is why I said that psychology has a lot to do with it. Not directly psychology besides the emotional, personal things of trading. Besides that, is like who's going to blink first. What he is thinking that I am thinking, and what is he thinking that I am thinking of he is thinking, etc. And this is more or less this chasing game, and the building blocks of that, and you will start figuring them out, is who is buying, why is buying. When you start figuring out that with experience and feeling and etc., and years of work, you will start seeing how subjective trading is. That is why a lot of people that approach to the markets fail, because it is way more complex. It's not only about the market structure, the market language that is by itself super difficult. You need to use that super difficult skill to subtract information that besides you need to analyze, to figure out to speculate what others and whom are others thinking. So this is a mind game, you know. This is not precisely something. We don't have time now to review dollar yen. The only thing that I can tell you is that I sustain what I've been saying in the latest webinar sessions. The fundamental direction here is to the upside. We just got to the 112, retesting it now, and the market is now at that kind of resistance zone. But if the probabilities of dollar yen of continuing moving up even after hitting a resistance is higher than in euro dollar, even if in dollar yen we are hitting an important resistance. Why? Because of the only reason that this resistance in dollar yen is way less representative than the 1.10 resistance in euro dollar. First of all, and secondly, because the fundamental direction in dollar yen is active again, that is to the upside, and this is like, it has no competition. Dollar yen has no competition in a fundamental direction. Understand correctly this. Fundamental direction doesn't mean that you buy here and you forget, and every time you will buy, you can have success. No. You always need to think how much I will lose if I am wrong. So you need to find a way your risks to run risk conservatively. The thing is that, yeah, dollar yen has a much more steady, predictable patterns, both to the upside or downside. But they are like less distorted. In euro dollar, you need to still factor in what's going to be the effects of the monetary policy. We have no further problems in that side in dollar yen. We know that Japan won't get better in the next 5 years. So the only thing you need to focus is the United States instead of two economies. So give yourself the chance, if you are not trading dollar yen, that would be very strange, to focus on that. Just try to move from running risks on euro, on pound, to find trading opportunities dollar yen. Fundamentally, the movement is active to the upside. We will have, of course, movements to the downside, opportunities to the downside, opportunities to the upside. You need to take your decisions with your risks. And all this information will give you an idea where are acceptable risks when you long and the acceptable risks when you short on a fundamental active bullish view, bullish trend in dollar yen. I would like to thank everybody for showing up to this very long webinar, very kind of exhausting webinar, but I believe it was necessary to explain overall, after the French elections, the next 6 months outlook for euro dollar. And the only thing I want to close this webinar with is distrust the mass media. They're not there to help you, at least not in this aspect. So yeah, have your own opinions. Market is a language, and you need to learn the basic tools the basic blocks of this language by yourself to do all the things that I just explained. It will take you time, but it will start at some point making sense. Hopefully this information will help you to get to that point of having the right tools to start developing your very own financial and personal decisions in the Forex world. Thank you very much, everybody. Remember that I expect you next week, same time, same place. This is our webinar World Reach. This is Alberto Alvarado. See you next time. Bye-bye.